Welcome to the Debauchery program, brought to you by Cliff Cool's Notes, a daily consolidator on the most insightful presentations, articles, essays, and the interviews on the web on the ultimate confidence game, money. Our site presents ideas from the smartest and wisest money managers, economists, and analysts.
Hello and welcome to the Debauchery. My name is Allison Holditch. Today I'll be interviewing Doug Casey of Casey Research. Doug is a highly respected author, publisher, and professional investor. Doug literally wrote the book on profiting from periods of economic turmoil. His book, Crisis Investing, spent multiple weeks as #1 on the New York Times bestseller list and became the best-selling financial book of 1980. Doug also broke the record for his next book, Strategic Investing, by receiving the largest advance ever paid for a financial book at the time. Doug, from your recent book, Right on the Money, can you highlight what actionable steps you advise your readers to take to secure a financial future?
Well, let me paint a scenario for you. We entered a fantastic financial storm in 2007. And we went into what I would call the leading edge of a hurricane. And that hurricane crested in 2008 and 2009. Now we're in the eye of the storm. And perhaps this year, 2014, we'll be exiting the trailing edge of the hurricane. The difference is that the storm this time is going to be much different, much more severe, and much longer lasting, and much scarier than it was in 2008 and 2009. So view it from that point of view. And Right on the Money is a discussion of what an investor should do to survive, what's caused the storm, and where it's likely to end up.
What are your views on Bitcoin? How would you compare it to gold and silver?
Well, I'm philosophically favorably inclined towards Bitcoin because it's an alternative to fiat money created by any of these governments. And the amount of Bitcoin is mathematically limited. So that's a plus. On the negative side of Bitcoin is that it's strictly a trading sardine. It has no value in and of itself, except as a fund transfer method. So I'm sorry I didn't get involved in Bitcoin when I was promoted on it, when it was about $15, actually by a Belgian chap who visited me here in Cafayate, Argentina, and subsequently went to 1200. But you can't kiss all the girls, and at this point, I think I'll wait for Bitcoin version 2.0 before I get involved in it. Potentially useful, but no value except as a low-cost fund transfer element.
And how would you compare Bitcoin to gold and silver?
Well, it's an alternative currency, but there is a difference. It's that throughout all of history, gold and to a somewhat lesser degree silver has been used as money. And the reason for that is Aristotle in the 4th century BC defined the 5 characteristics of any good money. It has to be durable, which is why we don't use wheat as money, for instance. It has to be divisible, which is why we don't use artwork as money. You can't make change for the Mona Lisa. It has to be convenient. That's why we don't use lead as money or sand as money. It takes too much to be of value. Consistent. That's why we don't use real estate as money. Every piece is different from every other, and it has to have some value in and of itself, so it's not a pass the old maid type of situation. It has to be usable for something. It has to be a commodity, and that's the fault with Bitcoin. It fits those first 4 characteristics, but it has no use except as a transfer mechanism, so that's why I'm not convinced it's going to last for any significant period of time. is a high-tech metal. It can be used in hundreds of different ways, more every day, because it's a naturally occurring element that's superlative. It's the most conductive and the most inert of all things, the second most reflective. It's got many advantages in addition to its traditional uses in jewelry and dentistry. It's not true of Bitcoin. It has just one use, and it may fade. And there are 50, 100 possible competitors to Bitcoin. Bitcoin doesn't appear to have any advantage except for the first mover advantage. So, as I said, I wish it well. I'm favorably inclined towards it philosophically, but there are problems.
Continuing on the gold and silver trend, do you see prices going higher from here, or you predict another plunge?
Back in the early 2000s, particularly in 2001, I pointed out numerous times that at $250 where gold was and $4 where silver was, they were cheaper in real terms than they were in 1971 when they'd been price controlled by the government for decades. In other words, $250 in 2001 was cheaper in real terms than $35 in 1971. So it was a risk-free investment with huge upside, as it showed. It ran to $1,900. Now it's, let's say, $1,300. So it's reasonable value, but the reason to buy gold and silver at this point are for prudence or insurance, for maintenance of capital, not necessarily speculative capital gains, which were realized in the huge run from 2001 to 2011. But it's more important than ever that you buy gold and silver because they're the only financial assets that are not simultaneously somebody else's liability.
What characteristics should investors look for in gold and silver mining stocks?
Well, first of all, I don't even know, because these things bloom and die like poison mushrooms after a rainstorm. But let's say there are 3,000 mining stocks, so-called, in the world. You've got the majors, of course, like Newmont and Barrick, that actually mine the metal. And then you've got thousands of little companies that explore for the metal. As we're speaking right now, in real terms, these things are probably as cheap as they've ever been in history. They're the most volatile stocks in the world, so you've got to buy them when they're cheap. Everybody hates them right now, and for good reasons, because gold mining is basically a crappy business. In other words, gold mining isn't, quote unquote, like owning a gold mine. It's a low-margin, volatile, problematical business. That said, as we speak right now, the small companies especially, most of which have no value, no intrinsic value whatsoever, I want to hasten to point that out. That said, I think that the potential returns in the next few years are 10 to 1, 50 to 1, 100 to 1, huge. This is the time to buy them.
Do you see a credit bubble problem in China, and how will China affect the resource sector in the near future?
The monetary problems of China are even more severe than those of the United States are. Starting with 2007, all of the world's governments printed up trillions of currency units, and on a relative basis, the Chinese printed up even more than the Americans did. And so much of that money that they printed up has been misallocated into building these well-known ghost cities and trains to nowhere and highways to nowhere and so forth, in a vain attempt to keep people working and stimulate the economy. So I'm a huge fan of what's happened with China since Deng Xiaoping in the early 1980s. It's fantastic progress that they've made. But for a lot of reasons, there have been huge misallocations of capital, huge distortions created in the market. So they're in trouble too. And all the Chinese banks are bankrupt, which means either huge more money printing to keep their doors open or the doors close. and all those Chinese peasants lose their money, and then you've got a social revolution on your hands. So either way, there's going to be troubles in China. I wouldn't touch a Chinese stock right now.
How do you see the currency and bond markets evolving globally over the next few years? Do you see a global currency crisis?
No question about that. To start with, there are probably 8 trillion US dollars outside the United States. Unlike Americans that have to use US dollars by law, foreigners use them just for convenience. And with 8 trillion of the things, and the US government through the Fed creating, well, at the moment, what is it, 65 billion a month, they're going to become hot potatoes. They all might try to dump them at once. So, and it's especially problematical because all the central banks in the world use US dollars or currency or treasury instruments as the reserve for their own paper currencies. So if something goes wrong in the US, it's going to have worldwide repercussions. I'm speaking to you right now from Argentina. And of course, the government in Buenos Aires is once again going to destroy the peso. I mean, this is a regular thing. And it's not terribly serious, except for some locals that are unprepared. But when the US government destroys the dollar, that it really is serious, because it's the world's currency. And as far as you mentioned stock market and the bond market, all the world's stock markets are overpriced by any traditional method of determining value, dividends, price to book value. They're all way overpriced. I have no interest in these stocks in general right now. And bonds are interesting because they're in the biggest bubble in world history. It's the biggest bubble since tulip bulbs. So bonds are a perfect short sale. I don't know how long the government can keep interest rates at these ridiculous and stupid and destructive and counterproductive low levels where they are. But bonds are the short sale of the century, which is a pity because it's the biggest market in the world, and there will be trillions of dollars lost.
What do you see on the horizon then in terms of financial repression by governments?
Well, I'd like to define the word repression. And the best general definition is it's a period of time when most people suffer significant drops in their standard of living. So by that definition, the U.S. has actually been in a depression since about 2007. I think it's going to get much, much worse. Right now, we're in the position of Wile E. Coyote after he runs off the cliff and doesn't realize that there's nothing below him but air. That's where we are at this point. So I think we're going to see financial and economic chaos, and there's going to be a lot of unhappy people.
Why should investors consider international diversification of their investments, and how can this be done?
Well, because as serious as the financial and economic and market risks are in the world, and they're very serious, what's even more serious is your political risks, because your government sees you as its possession, its subject. They see you as a milk cow, and if necessary, they'll treat you as a beef cow. Therefore, it's very important, critically important, that you diversify your assets internationally, diversify politically, so that if things start going wrong, you can step across a border and be insulated from it. So that's what everybody should do, Americans first and foremost, but they won't, because they labor under they're living in the past. They think the U.S. is the same place now that it was 50 years ago. Land of the free, home of the brave, all this type of thing. It's not. It's rapidly devolving into a police state. But if they understand that, while it's still possible, and it's very hard, they should open up a foreign bank account, a foreign brokerage account, perhaps set up a foreign trust, buy land abroad, something they can't, the U.S. government has a hard time making to repatriate to the U.S., get a second crib where they can camp out if it's no longer a desirable thing to live in the U.S. Very few people will do these things, of course, but I think this is excellent advice.
Do you think that this slowing economy in the Western world will deteriorate democratic freedoms and liberties?
Well, I don't believe in democracy, incidentally. I think democracy is really just mob rule, and it doesn't work out well, especially once the majority finds that they can steal all the money from the richer minority, which is what's going on at this point. What I believe in is a liberty and a free market, which is different from democracy. But perhaps what your question really means is, do I think liberty and freedom are going to get better or worse in the world? And the answer is all over the world, driven largely by the U.S. government. Freedom and liberty are diminishing everywhere in the world. It's absolutely shocking. This isn't happening just in the U.S. I travel all over the world, and it's happening everywhere. Very bad trend.
Doug, thank you very much for your insights. That was very interesting.
Pleasure.